Good afternoon. Welcome to OptionsTender. It's Monday, February 24th, 2025. Welcome, traders. We're going to take a look at SPX. We're also going to show, as promised, on yesterday, we looked at the SOM rule, and we're focusing on recessional indicators. And so today we're briefly going to take a look at the Buffett Indicator and how that coincides with this chart here on the monthly time frame. And then we'll go through the normal analysis to give you mostly on the 65-minute what I think is happening and the pathways that price, if it does this, then we'll do this kind of thing. Okay. So let's jump into it. We're doing this intraday about 12:27 Eastern Standard Time. If you want to get these videos intraday, consider becoming a YouTube member. It's 99 cents, comes with the Discord and trade alerts. Also, the individual analysis we had a trade on Apple today, so I did an analysis on QQQ, a little bit deeper and also Apple to set up that trade. Okay, let's go. SPX on the monthly time frame, we have the 1929. If you're brand new, I've been showing this almost every single video. 1929 trend line, 2000 to now 2025 top. We have 2008, 2021, also in confluence 2025 top. Okay, I do have a recessional video that shows targets for. I do have to adjust exactly, but it's a small, minuscule adjustment because we've been bumping around here on the trend lines up high here, and we have some targets for you and scenarios on what I think this might look like in the larger time frame recession and or correction that should last quite some time. All right, so let's go ahead and pull up the Buffett Indicator. We have, what is it? Okay, it's very simple. It's essentially the United States stock market divided by the gross domestic product of the United States. Okay, and here it is right now. We're as of December 31st, 2024, we have a 211% extreme historical high. Okay, so that says it all right here. We're about 2.2 standard deviations above the historical trend line, and here's a visual of it. So you have your 1960s to 80s, that whole recessional period where there was a high there, and then you had the recession. There was a couple in between. And also, we talked about that yesterday. And the 2000 tech bubble, you see how that standard deviation, we're hitting it. And now we're historically not only hitting it, but way above it. There's a reversion to the mean. Okay. Right here, mean reversion. All right. That's going to come back and it's going to reset itself. And it's probably not only going to come all the way back to the historic trend line here, but in most cases, I think just like we saw for 2000 and then 2008, we had a flat pattern on the market, and so we came back to this historic trend line, and then we saw a market rally, a bull market at that, had equal highs, and then broke down to a standard deviation plus. To the downside. Okay, so the pendulum swings. Right now it's swinging extreme to one side. It's going to come back again. Now, going back to the chart, you can see this is what the 2000 top was. Had the bear market, made a slight new high here, had a bull market and another bear market. Okay, now essentially it's just a sideways move overall, but in lower time frames, thinking that, that's a 50% move in itself, and that was, I believe, a 60% move after that. Okay, and what I'm going to do is I'm going to start tracking sentiment and we'll do this every once in a while, not necessarily the Buffett indicator itself, but I think that a lot of people start paying attention to fear and greed. And so I want to make sure that we have those on our radar. And we'll probably do that maybe on the weekend video or so. So as of right now, in the red, we have AAII sentiment indicator. Now they do that every Thursday. I'm probably not going to track that every single Thursday. And just a heads up. Here we have on December 3rd, we have our reading for the Buffett indicator in yellow. That's 211%. We'll keep track of that every so often. And here is the AAII at the 28. Well, you know, there's some arguments that we're way too bearish to be in a turn. But I would argue, and this is why we're going to start tracking it, I think back here is at 44 or so. We're really, really bullish. Had a pullback, and yeah, we're bearish, but we're making divergence. That's my argument. We're making higher highs in price, but fear that the AAII bull bear is starting to get bearish. So we're diverging from price action, and I think that's going to catch up to the downside. Okay, same thing with the fear index. Fear was neutral to bullish as we got to higher prices, and then it dropped off and we're diverging from the two tops. And I think that's why we're in fear now. We should see extreme fear go on into different levels. And we have a full moon coming up on 227. Now, I know this is boring stuff, but I'm going to leave that more for the weekend. But I just want to give you a heads up. We're taking a look at the Buffett indicator, so we're putting that label on here. So let's go ahead and go to SPY. Let's do our regular analysis. Jump through this. There's not a whole lot that has changed on the higher time frame, so I'm not going to dwell on it. But this one was what we've been looking for on the monthly time frame. We've had this consolidation area for 4 months, and price can't break out from the 605 area, and you see the wicks on every single one of these months where it couldn't hold. And so coming to the end of February, I do suspect that we have a wick there as well. Going to the weekly. On the weekly time frame, we have this bearish rising wedge, and we're just banging off the top of the historic trend line right there. We came down to the 20 moving average. We're having a little bit of a little bit of a bounce there. So that's going to be very important for the next step down. So this could say that, hey, you know, we're looking for our bounce now and then a drop afterwards. But I still would really like to see just a little bit lower, maybe a lower wick through here to get our bounce. And I'll show you that on the lower time frame and why, because I do think this trend is going to break and then we go lower much faster at this point. All right, so far we're getting a reversal candle on the weekly time frame. Clearly it's Monday, so we'll be monitoring that. Now our time and price and our Fibonacci's. So we're looking for this 162% extension that we banged off of, reacted hard off of, and got above and broke out. So I think that we're going to retest that. That's also the 50-week moving average. And right now we got up to the 200% extension from the 2021 into 22 correction. That's the extension off of that and reversed right off of there. It's a beautiful, beautiful picture. We just picked up on that yesterday. And so I do think the next move down here is going to be around that 560 area. But we have something, we have a time and price, we have cycles here in April. All the way out to May. So there's a cluster happening here. And I know that's a big time frame, but it's the weekly. Okay, so we're looking towards the end of April, the middle to end of April all the way to the very beginning of May for some sort of, in my opinion, bottom. But clearly, if we start breaking out from this 200% at the 611, then we'll be looking for a top at that point. On the daily time frame, a couple ways to look at it. You have that the historic trend lines up here, up top, that we had reversals off of it right from the election, top here, a throw over here, couldn't hold above, rejection, 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 okay? And the other way to look at it was a megaphone pattern. And so rejected off the top a couple times now and had a throw over here. And now we're just barely holding, again, this trend line, which coincides with the 20-week moving average. Also, on the daily time frame, the 50-day moving average. So I think perhaps our wave one might be in. It would have just been a little bit more clear, and I'll show you on the 65 for the bounce to happen maybe going into tomorrow. It's not out of the question because we're at the we'll call it 600. I know that we're at 601 right now, but let's see if we reject off of there for maybe one more wick. I'm not playing that. We have our swings all the way out. The only short-term puts that we're holding are Apple at this point. All right. And we have to keep an eye on the 20 moving average and the 8 EMA as well. So if we do start to get a bounce here, it could be pretty shallow. Maybe we get a wick through here and then we start heading lower. Looking at fibs, time, and price, we're in. There's a lot going on here. Big cluster that we're about to get into. So let's see if this is a high going into the end of this week is where it starts. All the way out to the beginning of March, we have stuff going on. But I see the biggest spot here for the most dense portion is about 226. So on let's see, Tuesday, Wednesday, it just so happens that Nvidia's earnings. So we'll see going into Wednesday where price is. Maybe we get a bounce into Wednesday and then we reject going lower. On the 65, there's that megaphone. There's our major trend line. We held it, stick save, and it's a zone too because the same thing happened back here as well. It's starting to go higher. So it looks like we possibly have this 5-wave move in, okay? And so now this is not likely anymore. I think it's more likely we get our ABC, probably test that trend line again from wherever it goes. Test the trend line, maybe support again here for an ABC, and not likely that high, but it's possible. And looks like that would be a good resistance there. We have a couple spots in that zone, and then we get our break down from the trend line. Now, at that point, I know we just have one line here, but I do suspect an ABC correction and then a breakdown for a 5-wave move, and then you get wave 4 and then another 5 here. And so we'll be looking for, we can even set up a target here for the next move. But the more shallow the wave 2 bounce, the more deep the wave 3 extension, okay? And I am looking for, and I'll just put on here, I'm looking for a low or around the FOMC on March 19th, and that kind of fits a daily low there, but we'll see what happens after that because we can get a bounce and then lower prices into April and such and so forth. But I do think I'm looking for a low on this time frame on the 65 and the daily in the middle of March here. Now, and that coincides with this consolidation area. That's the breakout zone that we were talking about in the weekly. And that would be a retest of that. That would be our megaphone bottom. And this is also the 2000 trend or geometric line with the 2021 top. It's much more shallow, but that would be the confluence there that we're looking for. And we should see a 1, 2, 3, 4, 5 wave move into it. All right. So, yeah, well, I kind of drew it out here a little bit. Talked about that on the weekend in the Discord. So, again, it looks like we're getting our bounce now. So, I'm thinking that our wave 1 is in so far. And we'll keep this much more simple. We should get a retracement. And that retracement is likely to go to that 60-70% zone. And as shallow as the 50% as possible as well. So we have our retracements here. We're going to make those red to reflect resistance. And then clean up our board a little bit here. Keep it legible. And so we'll have our 50, 60, and 70% retracements on there. So price is likely to get into this zone and to reject off of here. That's what we're looking for. That's the setup when we'll add more puts. And then we'll see where that goes. It may be more sharp here. It doesn't matter. Time-wise, it could be, I think we have, that one's on the 25th for tomorrow. So that could be turned around Tuesday. And then, yeah, so we have something going on the 25th, but we'll see. Maybe we get our bounce in the 25th, and then we start heading lower, and NVIDIA just exacerbates that move. So we'll be looking for a wave 2. And then when we do have a high in, then we'll be able to get a better look at it, an extension. But for now, this is our wave 1 extension. And let's just say the 62% retracement, because it's right in the middle, should be where the move goes. And then again, keep our chart nice and clean. We're looking for the 162 extension. And I'll make that green because we should get a bounce in that zone. So that will be around 580, where that possibly could go. All right, so that would be wave 3. And I'll change my arrows later. Get a bounce for wave 4. And we'll look for wave 5 to continue lower. All right, so that's how we do that. We'll look for an ABC somewhere in here, and then I'll place those in. And then again, we have March. We have some clusters there. And then we have that March 19th that matches up with the daily. So that's a beautiful thing right there. That's going to be nice when that comes into play. Whether it's higher or it's lower, we know that we're looking for some sort of turn at that point. Let's go to the Qs. We talked pretty extensively on the Qs with the wave counts and everything in an individual video. And again, I would still like to see a more clear 1, 2, 3, 4, and 5. So if we do go lower, then maybe we'll get down to the 515. It's possible. I'll do a retracement here, and a wave 4. If this is going to be our bull bear. Let me do on the other one. This is where I usually put my fibs. So the retracement, if this is a wave 4, should not exceed 38.2% of the move of wave 3. So we're still in that clear condition here. And then I'll do that on SPY as well. Just so we know that if price moves down again to a lower price from here, it's fine. It's no big deal. We have our swings on. But this will be a good way to track a little better wave count. because then we'd probably form divergence, positive divergence, which we do not have. We're oversold, but we don't have a divergence yet. So this would create a positive divergence. It would give us a more clean signal, more clean wave count, and then we can put our nice deep retracement after that. All right, and we'll keep a close eye on this because QQQ, being a little bit weaker, can make a nice clean 5-wave move, and then SPY could be sneaky and be a little bit stronger and only make a 3-wave move. But that would lead me to believe that this would be not just a correction, but this would be an ABC into a wave 1, and then an ABC into 2, ABC into 3. So it'd be a leading diagonal where SPY would be a little less impulsive, wouldn't be as large and clean as a move as QQQ. This does happen in the beginning of moves. The beginning and the end of moves, they like to trick you. It's the most confusing, but then when everything starts to stretch out, it becomes much easier. So I would like to see a new bottom here, even if we don't get a new low in SPY. SMH. SMH just breaking down from that beautiful trend line there. And SMH looks like it may already have its 5-wave move in. It just appearing like this. But again, it could be the same thing as the Qs, where this is a 1, 2, 3, 4, and it gets a little bit lower. And again, we have the options expected move to the downside, and that would just play out so much better because we extend to the options expected move on one side. It's just highly likely that we don't make it to the other side, which would make sense because we'd get all the way down here, and then we'd have a nice bounce, and then we head lower. IWM. Nice breakdown of the consolidation area. Now I think this is going to start extending. I don't think we're going to get a whole lot out of this one bounce wise. I think this is going to continue lower, where this is a 1, 2, 1, 2 going into the wave 3 of 3 lower. DIA, pretty much the same situation where we have a 1, 2 or an AB. And now we're going to extend into a wave C where we have a 1, 2, 1, 2, and then a lower degree 1, 2, and lower prices from there with the bounces at this point because of the nesting here and the breakdown shouldn't be that large. VIX. I love the way the VIX is acting right now. So I'm going to show you from the weekly again to be clear what we're looking at. This is a breakout from a bullish falling wedge. We had a massive breakout there, and all of a sudden we're retracing. We got our low there, but really it's just a consolidation range where you had that ABC low, back test of the wedge, and now a new breakout happening where you're getting higher lows. Okay, and eventually we're going to make a high over this past 65 here. So this consolidation area, when we start breaking out of there, I think we start accelerating this move. Not all in one move necessarily like this, but perhaps this next one is like a wave 3, and then having our waves up, but rejecting off of that 200 right now. But this 21 is going to be a super big 21, 22 is going to be a big area there to break out from. So that looks really clean on the weekly. Let's go to the daily. So the daily, after breaking out of this smaller wedge, we have a nice candlestick here, nice move, and then a consolidation, a sideways triangle consolidation where we're rejecting off of that triangle top right now. And that's just a pullback here. So price is getting its bounce. If we would have held 19, then we would have had lower to go. So we could still go a little bit lower in the Qs and maybe retag that trend line there. But if not, then we're already getting our retracement. We'll probably get to the 28 EMA and maybe the 200, and then have our higher low once again and break out from that flag. So just a real clean price action here. And this is another way to look at it. If you just hold the wicks and the bodies here, then we already have our breakout on the 65. And now we're just back testing here. We have this nice structure. Not only is this one main structure here, but we have a 1, 2, 1, 2, 1, 2 inside of here. And we're going to start to unfold these moves where the fives are going to extend much higher. All right, so we're just getting started on this move. This 19 is going to be very important for the next move higher. Get above the 19, then you know we're breaking out from a larger triangle, and we're starting to fall on SPY on the market. And yeah, we're building the structure to look really good coming up here in the future. So that's what I got for you guys. Hope this information helps. Don't forget to like and subscribe. Thanks for all the support, and good luck trading. We'll see you soon.